Hi, this is the question paper for 2020, paper 21, May-June sitting. Okay, question number 4. Rani is a trader. Her financial year ends on 31st March. She provides the following information about her 3 types of inventory at 31st March 2020. A, number of unit, cost, selling price, and selling expenses. A, calculate the total value of the Rani inventory at 31st March 2020. First of all, when we want to calculate the valuation of inventory, what is the key thing that we must know? Lower of cost and net realizable value. So this is a key that we need to choose. Which one lower? Then we take the price to do the recording. Okay. What is meant by the cost? Cost is the purchase price and any and other costs incurred on the purchase of the goods. Whereas net realizable value is the estimate selling price less estimate expenses incurred for the sales. So there is a estimate because you didn't know whether how much you can sell it, but just mean estimate, not the actual. To calculate this one, based on this valuation, lower of cost and net realizable value. So we need to see the 3 items in here. Inventory item, A, B, and C. And number of unit 110, 85, and 90. Okay, cost per unit. Okay, when we come to the cost per unit, here they don't have any other additional cost for the purchase of the goods. So cost per unit no, just put in down first. Later on we check 17, 18, and then 15. No additional cost. But come to the selling price and the selling expenses. This one actually is a net realizable value. We take the cost and we take the selling price, 20 minus $2. So we get 18. Whereas 19 minus 1, we get 18. And then another one, 16 minus 2, 14. So now we need to choose which one is lower. So lower, compare these two, 17 is lower. And then this one both same, so either one same, no effect. Whereas this one is a net realizable value is lower. So now we calculate the value of stock. So the value of inventory. Take the quantity times the unit price. Okay, add all this amount together. So we get the total of the inventory. Okay, 4,660. Okay, Rani later discovered that she has an amount of inventory of item D at 31st March 2020. This inventory originally cost 1,660. She considered this inventory to be obsolete. Okay. Now, let's see what is the question they ask. Explain to Rani how the value of inventory of item D affect the profit for the year ended 31st March 2020. Okay. If we're going to put using this information, okay, I just use this information first. Now, in this case, if we add in the D, okay, D, they say that original cost is 1,660. She considered this inventory to be obsolete. That means become zero value. So no cost of it. No net realizable value is zero. So in this case, we should choose the 0 to times the quantity. Therefore, you will get back the 0. So you notice that when you have add in the 0, your this value of the inventory still will not change. Okay, so here you can put that the net realizable value is 0. So therefore, total closing inventory remain same 4,660. Okay, now next is that they will know there will be no effect on the profit. Okay, so this one I wanted to explain further a bit because I'm not really agree with the marking scheme. So this one, the impact is from the marking, the answer that I use is from the marking scheme, which is trying to explain to you that net realizable value is 0. So that's why value of inventory, closing inventory is no change. So therefore, the profit also won't be changed. But this is my personal point of view. If you really think about the double entry, when we beginning year, we have the inventory, which is valued at 1,660. Because they say that later discover that she has amount of inventory of item D at this amount. And this item, which is cost, original cost is 6,660. Means that in actual, if based on my understanding is that they have the opening inventory for the inventory for the item, which is 1,660. If we use the accounting concept, income statement, which is we have the revenue less cost of sales, opening inventory, and then purchases, closing inventory. Okay, for my understanding is that when we have initially recorded 1,660, at the end of the year, there is no value for it. By right, is using the equation. Okay, we have the cost of sales 1,660, and this situation, it will talk about the gross profit. Take the revenue minus cost of sales. You notice that this is a negative. Negative means that this is a decrease on the gross profit. So by right, this answer, okay, yes, I agree that the closing inventory still remain the same. But come to the profit. The question is saying the profit. So let's assume that this one less expenses. Okay, less expenses and then profit. If we see the equation here, by right, this amount caused the decrease on the profit. So the last sentence, they say that there will be no effect on the profit, which is I'm not really agree. Based on the situation, the accounting concept here, the amount, okay, to me, remain the total closing inventory remain the same, 4660. But the effect, there will be effect on profit where reduced by 1660 due to opening inventory. So that should be the answer for my point, from my point of view, compared to the marking scheme. Okay, now let's continue. Advise Rani whether or not she should stop purchase item D to avoid having obsolete inventory in the future. Justify your answer by providing advantage and disadvantage. So we just put in what is the advantage when we have the stop first. Advantage. Okay, we give 2 points of it since that here is 5 marks. So what is the advantage that we have for the when the she should stop? So we agree to stop. So stop purchase item D. So she has more money for others purpose. So this is one of it. And also, if she stop to buy the item D, she does not need to worry about obsolete stock for item D. Okay. Other than that, it will be good for her business because customer may have more choices. Sorry, this one is less choices. It's not the advantage. This is actually disadvantage already. Let me think what else that could be the answer. Okay. If she choose, she has more money for the other purpose. And then what else that we can think about? Okay, after we don't buy, then she can save storage cost due to less inventory to keep. Okay, that's a 3 point enough. 2 points should be enough already actually. Disadvantage. Okay. First one is about customer. Customer have less choices. So less choices. So what will happen? They may go to other supplier to buy item A, B, C, and D. Okay, next is that. So she will lose a customer. So this one actually is lost customer. Okay. Lost customer. Due to customer go to other place to buy. Okay, other than that, okay, this one is the customer may need to make sure that the item, let's see how are you going to put in. lost the customer. Customer has less choices. They may go to other supplier to buy item A, B, C, D. Then the new customer may not come to who, okay, let's see. The new customer who may want to buy item D may and who may want to buy item D will not come to Rani. This customer may buy other item other than item D. So there is, you totally lost a new customer who interested to buy the item D at the first place. But because you didn't get chance to get them to come to your shop, then you got totally no chance. So now come to the conclusion or the recommendation. What you're going to make the recommendation. Okay. For this question, let's we see the item that we have. We have the 3 items. D cost 1,006. Okay. If you talk about the business, if you can attract for my personal point of view, if you can attract the new customer, give customer have more choices. Why don't you buy a little bit and keep into the shop so that you can let people see more choices. People feel happy to come. So for my personal opinion, I will say I will advise Rani to keep some item D. Okay, to keep some item D so that she can attract more customer to visit her shop due to more variety of the items sell in the shop. Okay, so there is the conclusion that I'm going to make. Okay, now let's move on to the next. Okay, Rani earned advertising income by placing advertising board in her shop window. The following detail relate to her advertising income. On 1st April 2019, Rani has received 420 in advance and 300 was owed to her. So that it means that in the beginning of the month, okay, let's move down a bit. Okay, beginning of the month or beginning of the year, the one is received in advance. This is an income, advertising income. That means it's an income account. When received in advance, is a liability. So we have to put into the credit side. Liability is in the credit side. So balance brought down. Okay, 420. Whereas another is owed to her, which is the asset 300. So debit side, credit side, both also have balance brought down beginning year. During the year end, 31st March 2020, Rani received check payment total 6,000. She decided to write off the amount of 300 owed to her. That means this amount becomes the irrecoverable debt. And this year end 2020, March 31st, she received check, means that debit bank, credit advertising income. So this one you must write bank because it's a check, 6,000. At the same time, she decided to write off this 300. Since that here is debit, when you write off, must be in the credit. So this one you call irrecoverable debt. Okay, 300. On 31st, 2020, Rani has received 5,000 in advance. Year end in advance is a balance carried out. So this is the end of the year. So end of the year. So this is balance carried out. Okay, take notes for it. So when end of the year, there is a balance carried out, received in advance, it will be sitting in here. Okay, but we cannot put it here. We leave one empty row. Why? Because this is an income account. You must have the income statement to write it in the debit side. So we drift this income statement first because we don't know how much of it. So here, balance carried out. So this balance carried out is this received in advance, is a liability. So this is a liability. And 400 was owed to her, which is the asset. End of the year asset balance carried out will be in the credit side. So this is the current asset. Okay, whereas this one is the current liability, because this is a beginning year, this is the end of the year. So different, one is a balance brought down, one is a balance carried out. So now we calculate the subtotal. Okay, take the credit minus the debit amount. So we get 6,320. This is the amount, it's a balancing figure that you need to transfer to the income statement. And don't forget, always in the exam, balance carried out, balance brought out, always must be the one pair. One pair means that one debit side, one must be credit side. Okay, another is this one, also complete it. Now let's move on, see what else the question they ask. Okay, explain to Rani the effect on gross profit of recording sales of inventory as advertising income. So when the sales, okay, let's see, I prepared a simple income statement just to show you the section, revenue, okay, less cost of sales, and then we get gross profit, and then we plus other income, and then we less expenses, and then we get the profit for the year. So now, based on this information, they say that explain to Rani the effect on gross profit of recording sales of inventory. The sales of inventory by right, this one. Sales of inventory should be under the revenue section. Okay, this should be the revenue section. But we go and put into the other income. Okay, record wrongly as advertising income. So what happened to this amount when you recorded into here? So this one, revenue section will be understated. So when revenue understated, gross profit also understated. Okay, there is the impact on the gross profit side. Okay, so this is the impact gross profit, because why is understated? Because advertising income is under other income section. Okay, so there is the reason that you can put in for the number E section. Okay, so this is for the question number 4.